Hi everyone, happy Friday. Welcome to the session. As usual, we'll give it a few minutes just for people to jump on. Session. Check. Last week I put the wrong link in the Slack channel, so this week it looks like I put the right link in, which is good. We're into mild stress. I think then I'm just going to start, in the interest of trying to finish this on the hour, I'm just going to do a little bit of admin, and hopefully by the time I finish with the admin, it'll be good to start. Hi everyone, welcome to today's session. We're very lucky to have Zoe Chambers here talking to us about DeepTech investing. I'll let Zoe do a full proper introduction to yourself in a second, because you'll do a much better job of it than I can. Just a quick bit of admin from me. Got a few questions still about the recordings from last week. Again, apologies, we did have a slight issue with Zoom and YouTube, but everything should be up now and you should be able to see all the recordings on the Notion page as usual. All the recordings from this week should be fine. With fingers crossed, we're not going to have the same tech issue 2 weeks in a row. So they should be up from this evening. Do bear in mind that when we first put them up, sometimes it takes a little while for them to fully be accessible. So if you click on the link and the video is not loading, just go back in an hour and you should be able to watch the recording. We are going to make the US raising a seed round video available to everyone here as well. But I think that's it on recording admin. Otherwise, as usual, extra information is all available on the Notion. We've got, if you still are having trouble getting access to the Notion page, just drop me a line separately. It's been posted in the Slack quite a few times now. And I think that's it. As a usual reminder, we will be kind of tracking attendance of sessions, but if you can't make any sessions for any reason, let me know. And without much further ado, I think I'm just going to hand over to Zoe.
Thank you so much, Julia. First of all, massive apologies for the fact I appear to be in my gym kit still at Friday lunchtime. I'm sorry. You are all much more important than me wearing my gym kit, but I think, yeah, I've just got to the end of Friday and I kind of forgot that I'd be on video, so sorry. Second of all, thank you so much to kind of over 30 of you and for everybody else who's going to end up watching this. I think what Future VC is doing is amazing. I love that lots of you are, basically entering this world by joining this program. It is a bit of a funny world to get into, so I love that we're able to talk. And today I would really encourage you to ask me anything. So deep tech investing or otherwise, I'm here to kind of ask and answer all of your questions. I joined VC myself 5 years ago. So before that, everyone says they kind of have a non-traditional path, but look, I've always been like a quote unquote professional. So I am not entrepreneurial myself. I went and did a an undergrad in an English law and French law degree at UCL. I was then at a US law firm doing M&A and private equity and actually structuring some kind of VC funds for like 9 years. And then I worked in special sits group at Goldman Sachs, which is kind of an interesting part of the bank that, invest their own balance sheet money. So they wouldn't like me to say this. Anyway, operate in this world now and do some more kind of software investing now. And then I made the jump, probably a lot like a lot of you, sat there thinking, okay, I work very hard. I do like lots of parts of my job, but what do I really love? And where I got to was I really love people. I really love cutting edge technology. So basically where you spend your entire life with people who are far smarter than you, thinking about ways in which they can change the world and genuinely move it forward. And again, declaring a bias. By that, I do not mean, can I get my groceries in 10 minutes? I mean like actually game-changing ideas. And the other things that I just kind of enjoyed is is kind of learning. So you're always on your toes. You learn something new every day. There's a new field being brought at you, and particularly what we're going to talk about today in deep tech. And so for me, the combination of that was very much found in VC. So started my career again, was very happy to, and now, work at Octopus Ventures, which is obviously one of Europe's largest and most active venture capital funds. We're predominantly a Series A fund, although we can invest kind of from seed all the way up to pre-IPO. And we invest predominantly in the areas of health, fintech, deep tech, which is the team that I lead, and consumer, and of course B2B software, because that is bread and butter, it appears, of kind of the VC world. And yeah, so I have a small team, kind of 3 or 4 of us. In fact, we're hiring for analysts at the moment. I would encourage applications from any future VC folks. And I look after 9 of our portfolio companies, and I do all the other usual bits that every VC does. So I'm sure you've heard it a lot, but we ourselves have to be good at fundraising. So we have lots of empathy with the entrepreneurs. We then have to be good, and this is where you guys have to be great when you're starting your career, at sourcing and diligencing and finding exciting new deals and winning over those entrepreneurs and convincing them to work with you for kind of the next 5 to 8 years. Then managing those businesses, so really leaning in as and where you can and should be, and then obviously helping them through to kind of liquidity events and returning capital to the fund and to your investors. So today, talking about deep tech investing, which is obviously what I do, what I love, and where I really do think, particularly in Europe, this space is only going to get hotter. I know you guys will also be hearing from, or have heard on the fronts. So the other areas where I think lots more will be done, impact and clean kind of investing. Obviously, climate is huge. I think that can also fall within the remit of deep tech if you think about the proper technologies that are going to kind of actually make a change. And of course, being where we are well, I'm sat in London, but in Europe, fintech is really, again, on the up and up, and somewhere where I think we've probably got to jump on the Americans. So what I would like to kind of talk about today is a bit about kind of what I see deep tech as, what I think is important when you want to look at deep tech businesses. I will touch on kind of the route in terms of origination, diligence, valuing those businesses, managing those companies, typical kind of hurdles that those companies come up against, which are quite unique to a deep tech business perhaps versus others. And then what the exit actually looks like. And so what you can often be stuck with, what the dilemma you can often be faced with a deep tech business, which is a kind of exiting early or actually having to hang on almost longer than a fund life cycle. Please interrupt with questions at any point. I am trying to pitch this, realizing you are all supremely bright and have been hearing a lot from different VCs, but I will probably be that awful person who either speaks in jargon or says something terrible. So please pull me up, ask some questions, and let's definitely try and get a dialogue going on this Friday lunchtime. So deep tech, I mean, it's also called hard tech, frontier tech, geeky stuff. It's known by lots of names, but kind of what do I mean when I talk about it? So when we talk about it at Octopus and when we talk about it within my team, we basically say, look, a deep tech startup has to have had a far longer running period of R&D or research and development. So they've basically spent, in layman's terms, a lot more time in the lab. They have developed, it's probably got, novel technology, novel science at its heart. It technically is therefore probably going to be quite an IP-rich business. Whether they've protected it properly or not is another matter, and we can talk about that when it comes to kind of diligence and things we care about. And it could involve an element of hardware rather than your traditional software businesses that you'll be talking to lots of other people about. It might well involve hardware. And of course, because of this, the risk of it not succeeding pretty early on at kind of the seed stages, it's more risky. I'd say there's more failures between seed and Series A and deep tech companies than perhaps in other sectors. And the team setup that you are often looking at the beginning is very, very technical. So you're often looking at a set of scientists, maybe even some academics, some engineers, who know everything about the technology that they are building, but who probably haven't ever built a team before. There's lots of first-time founders actually in Europe in the deep tech space, and other things. This isn't exclusive, but you will often find them in universities. So they can be spun out, which produces its own set of challenges around who owns the IP, whether those academics are going to come and work for the business full time. And so basically, I would say high research and development risk, high product market fit risk, because they're often developing a technology which has lots of applications. So it's quite horizontal. So for example, you might say, oh, we're this computer vision startup and we can tell what a person's doing in the street at any given time. Now you sit there and you're like, okay, that's wonderful. But, you know, are you going to sell that to airports? Are you going to sell that to kind of the cities, the councils? Like, where is that going to derive the most value from? And we see time and time again, technology that is kind of searching for a solution or a customer. And so what I would say about deep tech investing at seed is, as with everything, you are certainly over-indexing on the team, but something else that I particularly look for is some level of technical validation. And when I say that, what I mean is I can absolutely do that. Yeah, great question. What I say when I say technical validation is, you know, when they're telling you all these applications that this could be applied for, where's the pull coming from? Where's someone who's been like, actually, that's exactly what I'm looking for. I couldn't build it in-house. You are technically the most capable team who are going to show me how to do this. And therefore, we're going to give you a try. Now, there's some jargon that goes along with this in the deep tech world. You will have heard of proofs of concepts or POCs. This is when, you know, a customer says, sure, I will try your technology and try it alongside with you and give you some feedback. Now, with a deep tech business, you might also get into a world of what's called NRE or non-recurring engineering work. It's where you basically get revenue from a corporate, from a client, for you to do something specifically for them. So you're saying, look, this isn't really me building my product. I'm doing something that's, yeah, it's non-recurring. It's kind of one-off engineering work, but actually it can be a great source of technical validation. So if you see a business which has got some NRE revenue, it means that a customer has put money into their pocket, thinks that their technology is, you know, got good potential and wants to try it out. So let me actually answer some of these questions before oh mate, you bunch of legends, you're almost far too clever with all of these questions, which is great. So let me walk you through the deep tech DD process, perhaps, versus others. So what I would say is, again, with the team, I'm sure you guys have spoken about this a lot, but where the team stuff kind of differs in when you're referencing and what you're looking for is sometimes, and I don't over-index on this, but you're kind of saying, why would this technical team or this scientific team be able to produce this technology that nobody else can? So we will look at kind of academics H ranking, which shows how many publications they've produced, how much they're being cited. Basically, the downside here being, if nothing else, and not that you should solve for downside because you're a VC, you should always be thinking about the upside, but this team is very valuable. So you will get value from this team in a way that you won't in a consumer or a SaaS world. So I sit on the board of a business called Slamcore. That's a spatial localization and mapping kind of algorithmic first company. So again, layman's terms, if you think about us as humans, we know where we are. We know where we are in relation to the world. I know where I am in relation to this camera. I can do 3D spatial intelligence. Inanimate objects like robots and drones that need to move around autonomously can't do that. But what they've done is through vision, so through camera inputs and kind of depth camera inputs, they can give those objects spatial intelligence, essentially. Now, it's a lot of basically super, super clever maths, just to really dumb it down. But the folks who, you know, have those clever maths are professors at Imperial College, and they are probably one of only 2 teams in, I would say the world, when we looked at them, who really understand SLAM algorithms to that level and who've been repeatedly quoted. So you want to back folks who you think could produce the best technology and who probably have, alongside that, some great, and when I say contacts, they've often taught students who've gone off to work. So the professor who's involved with SLAM Core, lots of his students have gone off to work at like Blue Vision Labs, which was bought by Lyft, and some other places. So team is kind of a really important thing to dig into, just to understand why they could be building that technology or why that scientific invention, makes sense for that team. So that is, one big part of DD. And then the other bit, of course, is technical due diligence. Now, do I think at seed stage VCs would be engaging external consultants? No, they might not be paying for that, but they might be. So I've done a lot of cold outreach in my time of other experts in the space. So we were looking at, we spent a lot of time, probably about 5 years ago, looking at autonomous vehicles. And we just reached out to whether it's consultants or CEOs of other autonomous vehicle kind of startups to get a bit of the lay of the land, to try and understand the market view on where that business sat and kind of what it was building. Now, when you get to Series A and you're putting in quite a lot of money into these businesses, we absolutely will engage and try and find an external expert to do some tech DD for us. As I said to you, some of the hacky shortcut to this is having a customer. So if they've got customer or customers who are using technology, it's great to be able to talk to them because they are literally using it in the wild and often can give you benchmarks, particularly against perhaps open source solutions or other things they've tried. In terms of intellectual property, every investor is different. What I would say is, depending on the business, you should understand what they've got and how they protected it and why they've approached it in that way. They will not necessarily have invested in patent protection at this point. It might all be like trade secrets and kind of kept a secret source within the business. I would say red flags for me are more the other end. So if they've got like 100 patents and they're at Series A, they kind of focus on the wrong things. You really want to be just kind of focusing on getting the technology into the hands of customers and getting some feedback. And then look, finally, what I would say is customer is probably everything. So you're trying to understand, you're often in deep tech, either creating a new market or trying to see where the market is going. And so speaking to not just their existing customers, of course they're biased, please, like we all do it, but they use their technology, so they're going to be biased. But speaking to who could be potential or prospective customers and trying to understand their view on where the market might be going. Again, if you were looking at electrification of vehicles at the moment, you should be talking to some OEMs. People are quite open to chatting. The best thing about picking a VC is you're often telling them about technology they've never heard about. And so it's quite exciting and it can be a good discussion. So I would mainly say versus the others, you are looking at slightly different things with the team to try and make sure that it kind of makes sense from a market perspective. You are perhaps doing some IP work. You're definitely getting some tech diligence done either through customers or third parties. And you are probably trying to talk to prospective customers or people who they would ultimately sell into to understand how important this kind of solution is to them and where it is on their own kind of, should I put money behind it? I need to move on, that was very long, sorry, but thank you for the question, Brianne. What is the specific value added that I bring as an investor to deep tech companies? That's a very great question. So the biggest, again, I think particularly in Europe, thing that deep tech companies often need, and actually lots of CEOs need, but I would say here in particular, hiring. So hiring is the perennial problem and bugbear of so many startups. We've in-housed a talent team, and actually, I don't know if I can say this on recording, but we've just hired someone who's coming from the most valuable deep tech business in the UK, who recruits their engineering and science, engineering and kind of R&D and product teams to come and help us and our businesses recruit. Because if you can get like some rock stars on your team, you can almost go after kind of anything. And we've seen that kind of correlation play out time and again. So hiring is a massive value add. and a specific sector expertise. So recruitment is very broad, but recruitment for deep tech businesses, sometimes you need to build your own brand so that engineers really want to come to you. It's a really tough market for engineers at the moment. So you want them to be excited about working at an Audio Intelligence or an Altitude Angel. And that involves kind of building some excitement around the brand. The other value add is network. So a CEO of a deep tech, a CEO of any companies can be quite lonely, but particularly of deep tech, you need someone who's kind of gone through that journey ahead of you. And I'm sure lots of people will tell you this, but I feel like there are nuances in this sector, which there will be perhaps in fintech, etc., where you would, really enjoy talking to someone who has been through that. Now in Europe, we're only just starting to see a generation of successful entrepreneurs in this space who really can kind of pay it back. We sold a business called Magic Pony to Twitter a few years ago, and the kind of CTO there has finished his earn out at Twitter, and he's now coming back to Europe. And he will be an amazing source of help, because not only did he scale a business out of EF into Europe, sold it into a big US corporation, and then worked there, he will have all of those kind of West Coast learnings as well. And so for us, we really think it's kind of people centric. So that's hiring and helping build the team, and that's putting you in touch with, your investors can be as helpful as possible, but your peers and people who've gone through the journey before you is super important. And then of course, all the usual stuff like, here's our most recommended patent attorney. Here is kind of our, the person who will help you do your R&D claims. That is like not to be sniffed at. It's just great having a network of kind of, for us anyway, within deep tech, 24 other companies at different stages who they can ask these ridiculous questions of. And when I say ridiculous, they're not at all, but they sound ridiculous when I say it out loud. Do deep tech funds tend to be evergreen versus 7 to 10 year funds, since the timeline to commercialization is a lot longer? That's a very insightful question. So Octopus is evergreen by its nature because it's a venture capital trust. I will not bore you with the ins and outs of venture capital trust, but do go and look it up. It's not a typical LPGP structure. We essentially raise money every year from retail investors. So it's a trust that's listed on the stock exchange. You can read our interim and annual results. It's very, very transparent. But that means for me as a deep tech investor, exactly to your point, it is amazing because there is not the pressure within the usual fund timeline, which would actually be quite difficult, other than, as I alluded to at the beginning, some deep tech businesses get taken out super early. But if they don't get taken out super early, it tends to be kind of more of a 10, 12 year timeline, actually. That is my door. That is really, can I just step away for like 1 second to buzz this person? This is what you need on a webinar, isn't it? Sorry, everybody, but this is real life. 2 seconds.
While Zoe's off answering her door, we'll find some of the reading and we'll include some information on VC trust setup and so on later on. And yeah, keep it going with all the questions because this is great.
Sorry, absolutely outrageous timing. I will blame my neighbour for that. As I was just saying to you guys, in terms of the evergreen question, which is a really good question, if I was setting up a deep tech fund, which was GPLP, kind of your traditional structure with usual limited partners, I think I would definitely be wanting it to be longer in lifetime because, to your point, the time to commercialization is a lot longer, and you just have to have more patient capital, and trying to shove it into your traditional timelines just shows that you, to me anyway, you don't really understand kind of what those businesses look like as they come to maturity. And it's probably been a bit of our problem in Europe actually, as to why we either end up kind of having businesses that sell too early or can't raise capital at kind of the C/D stages because those funds just kind of aren't there. Right, sorry. Hey, I recognize that name. Do returns on deep tech pod investments differ from fintech, health tech investments, timelines, multiple success rates? That's a really good question. So I'm going to be talking about data off the top of my head here. at the moment, the market, as I'm sure if any of you are kind of working, well, in the first 6 months of this year, the market incredibly hot, very, very bullish kind of valuations. There are fintech businesses with like barely any revenue being valued at 100 million pre-money valuation, which is wild. But what I will say with DeepTech, which is amazing, is that there's this, Apple particularly do this. So there's this window of businesses that get bought up in the kind of first, I would say, 3-ish years of their lifespan. And they are often pre-revenue or pre any sort of kind of like recurring revenue models. They're not really necessarily licensing anything into production. They might have had some non-recurring engineer revenue, which I was telling you about earlier, that kind of NRE stuff, which is all proper revenue, which you can recognize, but it's not like your SaaS kind of, oh, it's recurring, let's put a forward-looking multiple on it. And so, but what happens with those businesses is obviously the multiples look amazing because you're basically doing a multiple of 0-ish recurring revenue, and they will often get taken out for kind of between 50 and 200 million pounds. Now, it has been shown with a few data points that Apple will essentially pay someone like an Apple, sorry, please don't quote me, or like Apple come after me for saying this, you know, kind of up to £5 million a head for an engineer if they think they're that talented and they're really going to, you know, be an important part of their team going forward. So some of that value is obviously accruing to the team. Some of that value is just to take the technology out of the hands of the wider market. So it's just kind of takeout value. But you can see if you're a VC who's gone in, and I would say the typical Series A valuation for a deep tech business over the last couple of years has been about a 20 million post money. And again, I'm sure you've heard loads of valuations, like they seem to make no sense. How do people do it? But deep tech has been, or I would still say, is far cheaper than like the fintech market because there's less competition, there's less, and as you know, there's less likelihood of revenue. So you're basically able to kind of have a sensible discussion with the business. And so returns at that point look amazing. You might have put £3 million in, £4 or £5 million in. And of course, if you're then selling within the first couple of years, you're getting, not only are you getting that money back really quickly, which if you guys do any kind of IRR calculations, or, you know, the time that you're getting that money back is obviously super quick turnaround, like 2 or 3 years versus 7 to 10 years. But also because of the strategic premium that these big tech acquirers are placing on kind of the deep tech businesses, which have no revenue, the multiples kind of, I would say, make no sense, aren't really comparable to kind of, say, fintech, health tech. So you might see, okay, the SaaS multiples a few years ago were 8 times kind of ARR, then they went up to 25 times at the heat of the times last year. There's a bit of contraction now, but it's all multiples on actual revenue. And then like kind of fintech will be the same. Deep tech is strategic premium placed on how those acquirers feel that they could in-house that technology, how valuable it be to incorporate, or how valuable it is to not give access to the wider market to that team or to the technology they're working on. And then equally, we sold Wave Optics, which is a waveguide component manufacturer. So what I would call kind of like the gatekeeper to good augmented reality, good augmented glasses, screens, to Snapchat like a month ago. And I'm not really allowed to talk about their multiples. In fact, I'm not allowed to talk about multiples, so I won't. But what I will say is they had actual revenue, but again, a real strategic value was placed on, you know, on what they were buying. And that was also because it was just too important to their future business for it to like kind of go anywhere else. So I would say they differ because they can be disproportionately outsized versus the revenue, and there's often very strategic premiums placed on them. And then, oh gosh, there's so many more. This is so good. Let me see what I've answered. Wes, do you expect the founding team to have already spent some time doing R&D before raising a seed round? 5-7 years to exit is comparable to, yeah, I do absolutely. So the way it kind of goes is like experiment, lab testing, analytical proof concept generation, I'd say, for kind of a year or two, and then even like prototyping, again, within that, like just demoable. And then often on a seed round, you might have some, basic prototype, a team that's formed, people that have started working kind of full time. And there might be some technology risk left, but you've still done, to your point, a good couple of years. And you may also have done like 5 years of a PhD on something. So it's not like, I agree, it's more, 5 to 7 is ideal. It's closer to 10 to 12, I would say, for most deep tech businesses. And that is exactly because of the amount of time you spend kind of doing the R&D piece at the beginning. Bit of a niche question. I love a niche question. Have you picked a side in the quantum key distribution versus post-quantum computing debate in the quantum security space? Do I think that one has more potential than the other? That is a very niche question, and you should definitely come and talk to Simon and my team about that. We have spent time with people in both sides of that. So I'm trying to think off the top of my head, PQ Shield, ARKit, I've seen like 2 more recent, well, I say recently is like time doesn't mean anything in the last 2 years. So we haven't. I think what we have done is we've obviously said, look, NIST, the National Institute of Security Standards, kind of needs to come out and kind of make a decision on what standards it is accepting. It's quite hard without that guidance to decide what we're going to do or who we're going to place a bet in. In the meantime, we've basically said, look, some money should definitely go into security as soon as kind of if you backfill from kind of a quantum computer, you would be saying, yes, okay, breaking everything cryptographically is what we need to kind of solve against. That would be the first place to put money, and then you might put it into hardware and then eventually software. So we haven't made a bet there, but we've made a couple of bets in the hardware space. Now, obviously, that's kind of like one step on. So no is the answer. And I think that is probably not because we think one has more potential than the other. That's probably because we think that from a standards perspective and market penetration and adoption perspective, we think that that's going to be driven a bit more by NIST. But great question. Oh, there's so many. This is just so joyful. Aisha, hello. Are there any trends we're seeing in deep tech? What's hot? Oh God. So what as I just talked about, we are doing obviously quantum computing, so but very much on the hardware side. We haven't made any bets software. We think hardware needs to be figured out first, and that's very different for us. We've decided to do some follower checks rather than lead, because there's quite a few different approaches and we can't really decide which way first. We are looking quite a lot in the automation space in the life sciences and the lab world. So if you think about anything actually, like manufacturing labs, how you orchestrate machines to work together often needs a kind of software layer or an infrastructure layer, but scheduling all of that, figuring out what should go where next, we think is a really big problem, and not one that's been tackled very well so far, and one that might also need a bit of hardware in it. So we're looking at that. We are looking at some software solutions for electric vehicles. So Tesla's made it very obvious that every OEM of car manufacturers needs to kind of think about software as their most important thing. So we are spending some time there, particularly in kind of battery management. We are also looking at kind of alternatives to plastics, carbon capture technologies. Like, that is not a new thing. I know it feels very fashionable to talk about climate at the moment. And then myself, I will always be looking at robots and drones because I am a user, but I enjoy that. So I would say, luckily, it is a space, and space, I mean, oh God, it's a space. When I say it's a space, and then I say the word space, that has no end of things that we could be looking at. And we're very lucky that we can keep it very broad. So lots of exciting stuff. what am I excited about? What excites me about deep tech investing? Do I justify the hype? Oh, yes. So I think what's obviously super exciting is, and I don't mean this to poo-poo other areas where people are innovating, because I think it's really important. But we're never going to invest in like an Instagram. But what we are going to invest in is maybe something that allows people with hearing problems to hear properly in noisy environments, or we are going to invest in, perhaps some hardware which will end up unlocking drug discovery. So it is always the bleeding edge that enables kind of big giant leaps forward for kind of mankind. And so I think you couldn't not be excited about deep tech, whether it's putting rockets in space, or having brain-computer interfaces which allow you to think rather than speak, and have a computer understand what you're saying. So I think the hype is justified, particularly in Europe also, because of how much talent we have here. So there are an amazing number of research institutions, Nobel Prize winners, scientists, and per GDP, we definitely outpunch our weight even versus the US. So, I think there's a lot to be harnessed here. So for me, and obviously I'm hugely biased actually, so best question ever, like, do you just, I think brilliant. Exits on deep tech lower than other types of businesses. So what I would say is that we have seen like a crazy amount of money pile into fintech and to SaaS, both when they go public and when they're being acquired by trade. We have seen over here, obviously, DeepMind be a big acquisition. In the bio space, you will see billions, and when the person talks to you about bio and saying bio, you'll hear that. I think we probably haven't seen big enough exits yet on this side of the pond, but they will be coming. And like I said, I think that's because some businesses have just been bought out too early, and actually it's just too appealing for the entrepreneurs at that point. And we need to kind of make the journey and the journey alone seem more exciting. But as I also said to you, kind of the numbers can be very, very big, and that is because of both the team and the technology. How do we manage unusual cap tables in DT? That's a great question. So the question here is basically, look, if you are dealing with university spin-outs or people that have taken on what they consider to be considerable risk with early stage investments in the deep tech space, they might have decided to perhaps like own 40 or 50% of the business. And for us at Series A, that's a massive red flag. In fact, it's probably why we wouldn't invest in some businesses. We wouldn't really want to necessarily do a recapitalization or a restructuring of the cap table. But I guess what we're trying to do to solve that is to educate both universities, educate entrepreneurs about how much of their businesses they should be giving away. And the reason I talk about this, of course, a university, if they have helped and invested, should not have nothing. They of course should be reaping the benefits of kind of input they've put in. But we want entrepreneurs to be incentivized. We want as well ourselves and future investors to have proper stakes that make sense for their funds. And if you take too much of the business too early, you're just kind of cutting these people off their knees. And so when you say manage, I would say we tend to shy away and try to educate about why that's not great. Thank you very much. My pleasure. The key ratios. So if you're thinking about kind of unit economics and you're trying to do a compare and contrast against SaaS, I would say that we don't have key ratios like that. Instead, and in fact, I will send you afterwards some of the benchmarks that we use. Julia, can I do that? Can I send some of the benchmarks that we use? And that's more around team, customers, number of customers, customer feedback, potential to revenue, IP. So that's more where we're focused on, rather than what's your potential customer lifetime value, how much does it cost you to acquire this customer. It's a really kind of different route in. But the other thing that is important to know, I think that we really try and look at is what their kind of go-to-market is. So you're often not going to be able to direct sell. I mean, you can't really direct sell an algorithm. You are going to have to kind of package this up somehow. Are you going to co-sell this? Are you going to have partnership channels? And so we definitely look at that. Please remind me to send this to you after so you can have a little look at that. How do I recruit or scout deep tech startups? Great question. You definitely need to hang around some amazing seed funds and angels. And when I say hang around, of course, try and deliver them value also. But equally, lots of the universities, so I would have their kind of their own specialisms now. And it's really interesting to see kind of what they are doing in terms of promoting entrepreneurship amongst their kind of PhDs and their postdocs. So we try to have kind of links in and catch up there also. So UCL have got a technology fund, Bristol are really hot on robotics, and Dyson have got a lab down there now. Glasgow has got some really interesting quantum folks, and obviously Oxford and Cambridge and Imperial have all got kind of seed funds and some brilliant folks coming out there. Entrepreneur First are very well known for finding these sorts of people and encouraging them to start businesses. And DeepTech Labs has just started in Cambridge, which is supposed to be bridging the kind of seed plus world, and they've had their first cohort of 5 or 6 businesses. And then beyond the obvious kind of earlier stage deal flow, we also try to stay close to entrepreneurs who perhaps have been at big, I want to say, they're maybe senior at somewhere like an Arm, where they themselves might now want to kind of do something else. You'll see in lots of spaces, actually, next generations of entrepreneurs who have perhaps, they might have been an early employee at Go Cardless or Revolut, and for us that might be DeepMind, and then they themselves decide that they want to start something. So they might have been employee number 4 or 5. So it's kind of nurturing those networks and seeing what those folks are up to as well. A lot of hustle and a lot of kind of getting on the street and talking to lots of people. Elias, by definition, deep tech startups are at the cutting edge of technology. How do I validate that technology solution you mentioned? Have you invested or know any VC that invests in technology that can commercialize it? Oh God, yeah, yes, Christ, yes, 100%. So as I said, like often getting a third party or doing some kind of multiple expert market third party research onto a solution is how we essentially validate that the technology works or the technology is interesting. So gosh, early to market, we have been, I mean, Wave Optics, we were early to market. That took, I would say, a good 4 or 5 years for someone to actually commercialize it and productize it into what it became. And that was no guarantee of doing that. And that's because, as you have seen, AR is still not commoditized. It's still not something which is in our daily life. We also invested in a systems on chip business called Ultrasoc, very, very early to market, and the market is only arriving kind of now. So that's kind of like security-based embedded kind of software. Oh God, it happens all the time. We invested in a kind of flexible energy trading platform. And again, we did that probably like 6 years ago, and that is interesting now. So I think it happens a lot, and I think it's probably a really insightful point from you, which is it's one of our biggest risks actually, is like we think there's going to be a market, but we don't know when that market's going to come. And so, we try to figure out what we think the trigger or inflection point for that coming might be. But we often get lots of things wrong, as you can imagine. With regard to deep tech investing, how early is too early? Is investing at the post-traction stage already too late? Probably, actually. So I think there's a real balance. So obviously there's lots of folks who do seed deep tech investing, and 2 things I would say. One, going at that stage means that you can get quite an attractive price, because you basically price in the amount of risk you're taking. So when you are valuing those businesses, perhaps versus a consumer business, health business, fintech business, you will be able to get a cheaper entry price, which means that if it goes well, amazing, and you can really easily return lots and lots of money. And if it goes badly, there's not too much damage in terms of you look per seed check to work. You do that lots of times. Post traction for a deep tech business, I mean, if there's proper traction, you're almost at the point where you're super, super valuable. And so where I would say I feel most comfortable is where the technology works. So it's not still in the lab, or there's obviously parts of it which will still be under development and improve, but the core of the technology works. And the customers are giving you some level of feedback that they would be interested, that there is an investment that they would put behind it, and that they like the team and what they're doing. And it is not something that they would have the time, effort, or ability to build in-house. So that's kind of my favorite part. But honestly, if you've got like big licenses or proper contracts in place, you're right, it's too late. So you've named that. I mentioned that failure rates are high for deep tech. When's the time to write off the failure since the fund's evergreen? And any risk of those written off startups making a comeback? Like how hard you know, I know. So failure in VC basically means running out of cash. So you can't find anybody else to, and this is a CEO's main job, I would say. If you've got capital, a lot of amazingly clever folks can make something work. They can pivot, they can figure out what they should be doing. So we don't, well, we write off when a business goes into administration, but we obviously work with those businesses to try and make sure that they don't. What I will say about the downside for a deep tech business, unlike others, is that you often have IP and a team, and both of those are super valuable. So you could package up that IP for a sale, you could package up that team and the IP for a sale. We will work with those businesses to try and get more capital into them, and to try and make sure that you need to give them a couple of rolls of the dice, is what I would say. If you write off businesses too early in the deep tech space, to your point, A, markets can come back and you shouldn't write it off for that reason. But B, you probably haven't given them long enough to kind of figure themselves out. Like only the top, you know, kind of 1% of teams figure it out first time within the first year of funding, and nothing is linear. It's startup space. So I would say we only write them off when they're actually dead. And you're completely right. There is lots of worlds in which markets which you didn't really think were existing come back. Alan, congratulations. Good old Seraphim just IPO'd or IPOing. I sit on a board with a couple of them. SPACs for space techs really seem to have taken up. Oh God, I can't. Okay, SPACs we could talk about for another hour. I have my reservations about how that is going to work out. I think that what I will say is that deep tech verticals like space need lots and lots of capital, and lots of capital at the series B, C, D doesn't really exist for deep tech companies in Europe. So pre-IPO raises, going public via a de-SPAC process, etc., is an understandable route for these businesses to raise money. You know, to me, I get that. But do those businesses want to be public companies is my bigger question. I don't think lots of deep tech startups with 29 NASA engineers and CEO are really ready for what that entails, both cost and effort wise. The public markets really punish you when you miss your earnings calls, when you miss what you say you're going to do, whereas private investors are probably a bit more forgiving. So I think the SPAC market will cool for a while. I think there will be more SPACs looking for kind of ESG or climate change, or like big, whether it's hydrogen or electrification of vehicles or batteries. That will be the space that I think will SPAC its life away next. But also, you know, the other thing is all those SPACs are in the US. Like, we want some of these assets to kind of stay over here, ideally. But yes, oh God, I've lost the plot with what I'm looking at. Which deep tech company do I wish I had invested in? That is an excellent question. And every good investor should keep their anti-portfolio close to them, just to remind them of all the mistakes they've made. I would love to have invested in a business called Lab Genius. I would love to have invested in DeepMind. I would love to have invested in Universal Robots, Boston Dynamics. I mean, I could go forever, but basically there are lots of misses, but there are also lots of fun ones. So we'll see where we get to. Right, I think do I need Sasha? Do VCs in this space tend to follow a high volume, high frequency? Yeah. So I think at seed, and this isn't just specific to deep tech, I think that lots of people do high volume, high frequency because the data shows that works better. So the more bets you make, the more likelihood one will come good, and then it can, you know, make up for all of the other ones. Beyond that, I think obviously it depends on the size of your fund and kind of how you're thinking about what, you know, more conviction means. Like for me, I think you make more bets at the beginning, and then the whole reason you have all of those is you stay close, and then you obviously double down into your best assets, and the kind of conviction builds over time. So you kind of start broad, and then you concentrate your money as you go, and hopefully you're kind of de-risking because you know more about the business as you go. Wes, hello. Do I view a team with both technical and strategic expertise to be better than a wholly technical team? Probably yes, actually. So if you've got like a technical load of superstars but who have no idea about selling or going to market, often in fact that they won't win, and in fact the best technology often won't win in that case. So if you've got a really superior technology and then a slightly, you know, kind of as good as, but with a team that can actually execute and kind of take that to market, they will normally win. Does this change with the funding round? In my experience, I've sometimes found very yes, completely. Sorry, his question is like, I've sometimes found very technical people to lose sight of the customer. Absolutely. So my most technical people are perfectionists. They don't like releasing anything that isn't just absolutely amazing. They are so granular, head in the weeds, and they'll be doing stuff that a customer doesn't even care about, will never pay for. And so having a great product, or almost like an all-rounder who can just keep bringing people up and being like, I'm the voice of the customer, do you need to do this, is really useful. And if you have no one in the team doing that, you will end up just spending lots of equity dollars on R&D, which is, you know, okay, but you know, that's never commercializing anything. Elias, have I exited any of my own investments in deep tech? So not yet. Wave Optics was the team's probably biggest investment in exit in the deep tech space. We've also exited, I mean, there are many of the team's experience that we've exited. So we sold Zinstra to Calastone, which was a kind of edge retail computing infrastructure layer. So kind of like point of sale, kind of virtual digital twin point of sale solution last year. Obviously, yes, Twitter to Magic Pony a few years ago. We sold EV to Amazon, SwiftKey to Microsoft. Do you remember, if anyone's got that phone which kind of like allows you to swipe your finger, that was one of ours. And don't say sorry for such long questions. I'm loving the questions. You're a bunch of superstars. Are deep tech companies more cash intensive? They are, traditionally, yes. They have more that goes into research and development on an ongoing basis. If they have hardware, they're absolutely more cash intensive. And are funding rounds therefore larger? Well, it's a great follow-up question. You would expect so. However, it's still a part of the market that isn't as fashionable or as invested in as fintech, for example, or consumer. So, you know, has there been a deep tech round which sits alongside Getir or Gorillas or any of those 10-minute grocery consumers who are raising hundreds of millions at billion valuation? Not as frequently, I would say. But equally, I would say that that's probably because, like I said, the failure rate can be higher at the earlier stages. However, on the flip side, like Cambridge Surgical Robots, CMSR, they just raised like kind of 600 million. So the ones that go well can raise big funds. I think that what happens with fintech and consumer at the moment anyway, the market's so hot that they're getting all that money a lot earlier. And then finally, I share ethical considerations. So one of the biggest considerations I make is, and this isn't ethical, this is just me being really biased, is can I put some more money to some female scientists, CEOs? There's not enough, and I would love to be investing in more. Otherwise, ethically, of course, we will be looking, we have an ESG kind of governance piece, which we go through as part of our investment committee. And that's not just around kind of carbon emissions or are we doing something in a lab which is ethically crazy. We looked at a solution to antibiotics. So as you all know, microbial resistance, antibiotics going to kill us all eventually. We've used too much antibiotics over the years. So we were looking at a CRISPR-Cas9, amazing set of Nobel Prize winners who were looking at a solution to this. And ethically, we said, you know, if this gets into the hands of the wrong people, like it'd be really difficult to justify why we invested in this. So didn't do an investment for that reason. Same reason why we wouldn't look at like drones, which are more accurate in war. It just feels on the cusp of, you know, what we don't quite want to be involved with. I definitely see less female founders in this space. I therefore over-index on putting every single female founder I see straight through to what we call a first gate, so a first pitch meeting. Hopefully we help them, we encourage more people to do it. And actually we are trying to put some more seed investments into female founders because we should. And it's really important to kind of level that playing field. I'd love to have more in the portfolio.
Thanks.
Do you want me to carry on? I realise I've got 1 minute left.
Well, if you can answer this one question, that's great. It's going to be the last question because that was also a really great point to end on.
Just very quickly, it can be perceived as unfair for them to go through just because they're female, but they are so underfunded and so underrepresented. Like it's a tiny, tiny stick in the ground to kind of let them go through. And then just having a tech background help, absolutely, but I don't. I'm just a curious, nosy geek who spends a lot of time reading up around this. So absolutely, if you're an engineer or a scientist, of course, it's brilliant. You can really, truly understand the kind of detail and what these folks are building. But I think if you are as insatiably curious as I am, you can get there also.
Brilliant. That was also a great point to end on, so perfect. Thank you so much, Zoe.
Total pleasure. Thank you so much, Wes. Thank you all so much for the questions. It was just so great to kind of virtually meet you all, and hopefully I will send you those benchmarks and I will send you my email addresses on LinkedIn.
Great. So questions, how do people get in touch? So all of that will be added and updated later, and the recording will be available if you want to look back and review.
Can't wait to watch myself, sure.
It's always fun. But that's it. Thank you again, and everyone else, I will see you all next week.
Thank you guys so much. It's been so lovely to talk to you all.
Bye.
Happy weekend.